Hello and welcome to MasterChartsTrading.com market recap for Friday, June 19th, 2015. This week, major indices gained for the week, and also market breadth momentum has improved and is on an upswing for many stock indices. But interestingly enough, bonds also gained, and we will look at seasonality of stocks and bonds. Also, we will look at the US dollar, and it looks like it may be ready for a bounce higher. This bounce, should it materialize, will weigh further on commodities such as gold, and we'll look at gold. And also we will delve a little bit into sort of like an anatomy of a trade that we did here at MasterCharts Trading, and what similar trades can be expected once our trading service is live. Okay, so let's go to the charts. So chart of S&P 500, a large cap index, it's a bullish chart. We just hit a new all-time high a few weeks ago, so that is definitely a bullish indicator to me. We then came down relatively hard into the last week and made a low here. Looks like the support has held. Then we rebounded and came down again, and looks like we retested the support again. So it looks like we have three tests of this support, and now a slightly higher high compared to this high. So definitely a bullish chart, and looks like we may be challenging the new all-time high soon if all things work out and nothing terrible happens. As far as market breadth, so breadth momentum oscillator, you can see that it is now above its 10-day exponential moving average, and is on an upswing. So it's also a positive sign. And new highs, new lows are definitely positive, and this is showing buying pressure, and there is really not that much, if any, of the selling pressure. So you can see red lines here, but they were not that strong for the past few months. So right now, market is very bullish, and new highs are likely. Again, I wanted to highlight this divergence in on-balance volume indicator, and you can see that the price is trending higher while the on-balance volume indicator is trending lower. And the same thing is happening in the advanced decline line as well. And I think the advanced decline line I pay more attention to than on-balance volume, because I think it's more important, because it shows the measure of participation. Whether or not this will result in some sort of a major correction or even a minor correction for that matter, it remains to be seen. We can simply work off this divergence and continue higher. Divergences have a notorious way of not working out. Next, let's look at bonds, TLT 20+ year Treasury bond fund. So our buy signal was generated right here on the 16th, I believe, of June. We did re-enter the market just kind of like a dip our toes into the bond market. Now, if you look at this chart, you can see that there are a series of lower highs, and definitely not a very bullish chart at all. In fact, some people say that it is outright bearish, because this is a kind of correction territory and possibly even a bear market territory. Another negative thing about this chart is this red line, which is a 50-day moving average, is now below the 200-day moving average. This is also not a good sign, and bears might say that this is a now downtrending security. Another negative thing about this chart is SCTR, Stock Chart Technical Rank, which ranks ETFs against one another. You can see it is now in the lower 20%, also not a good sign. Having said all that, I still think that long term, it has TLT and bonds in general have not yet entered bear market territory, and they're sort of in between, sort of. Because I also look at the weekly charts and some of the other charts to help me determine the direction of the trend. Now, again, it's not a very pretty chart. So this entry right here represents a pretty small risk, just a few percentage points. So if summer month, as I will show in the next chart, do turn out to be bullish for bonds, we may be able to gain a few points, possibly to at least 200-day moving average and possibly even higher to this area of resistance. So let me show you the next chart, which shows Treasury prices, and this is going back to 1996 to now. So this is 20 years worth of data, and you can see that the months of July and August, 63% of the time out of the last 20 years, and for August, 74% of the time out of the last 20 years, the bond prices closed higher in the end of the month than the beginning. And you can see that the gains were 0.6% and 2% respectively. So June, you can see, is kind of usually a negative month, but we're getting very close to July already. And usually July and August are the strongest months of the year for bonds. So that's just something to keep in mind as we head into the summer months. Now let's look at the same chart of seasonality for S&P 500. So seasonality chart of S&P 500 going back 20 years, you can see it's almost the opposite. You can see that summer months, especially July, or rather especially August, is negative, and September are negative for return on average. So seasonality-wise, summer months are not the best for stocks. So that's possibly why we're seeing people positioning themselves for the upcoming, traders positioning themselves for the upcoming summer month. Okay, let's look at the US dollar index. So if we zoom out a little bit, actually let me do that right now. Let me zoom out to maybe 10 months and see. It's a little bit more clear here. So this could be considered a head and shoulders, kind of like a goofy double head with two shoulders. And we are right now at the neckline. But I think the support has held for now at this neckline, so I didn't see a support break or a neckline break yet. If we do see a neckline break, this would put our measured move target price somewhere around here into the $87 price area. Now, it hasn't happened yet, and you can see that there was this big hammer candlestick right here on Thursday, and then a bounce higher on Friday. Now, Friday is definitely not a very bullish candlestick yet, but I think we are oversold on MACD indicator, and we're still within a bigger uptrend. So an oversold condition within a bigger uptrend is kind of like a recipe for a bounce higher. If we do bounce higher, we can easily bounce to the 97 area, or possibly even higher to $100 area. If this happens, if there is a break, a bounce in the dollar, then the commodities will likely come under pressure, and gold in particular is very sensitive to a strong dollar. So let's look at gold next. Gold spot price daily chart. So first of all, this is a bearish chart. You can see the prices are moving from the upper left to the lower right. The 50-day moving average is below 200-day moving average. So our shorting opportunity was right here, and this was actually a rather productive trade as well. You can see that the MACD was overbought in a downtrending stock, and overbought condition is a good place to go short. So this was a productive short right here, and then right here in beginning of June, it looks like the support from this area has held, because you can see a hammer-like candlestick, which means the people buyers came in during the day and pushed the prices higher, and then a rebound happened. on Thursday was a very strong rebound right here. So right now, it's kind of like in between, sort of. It's not yet overbought to the point of being a safe entry to go short, but it's also not really, like, to me, this is just a no man's land, sort of, because I'm looking for shorting opportunities, and this is neither a shorting opportunity nor an opportunity to go long just yet. So, however, let's look at the chart of GDX, Gold Miners ETF, and this one is a little bit different, but it kind of has similar pattern. Again, so good shorting opportunities were above the 50-day moving average. So any of these prices here, this was not a good opportunity. It didn't work out basically. But this one right here, with this drop, you could have entered right here and held position open, because here this actually did not exceed this high, because the close was right there, and this high was not exceeded. So even if you entered right here, I would have kept this position open. We however entered, I believe, right there, somewhere around here, and we rolled this position down. We took profits, I think, here, and we took profits, I believe, right there, actually during the day of this rally, because this was definitely getting extended to the downside. But even after this pretty sizable rebound on Wednesday, there's a pretty sizable rebound on Wednesday, you can see that on Thursday, GDX was not able to close above the 20-day exponential moving average. So after that, on Friday, we had another plunge down. Now, with all the internals, or most of the internals of the GDX pointing down, for example, you can see that advanced decline line and advanced decline volume lines both hit new lows here for the move, and GDX has not yet hit a new low. Now, on balance volume is showing there may be some accumulation happening, because you can see from here to here is actually trending higher. So we'll see. As far as bullish percent index is definitely in the bear territory. I want, for bullish percent index, I would like to see that at least above 50, maybe 40 territory, but this is still in the 23%. So definitely in the bearish territory. And the same thing as the lows are still outnumbering the highs quite a bit. There's like more than 20% new lows just a few days ago. So GDX still bearish. I still have a little bit of a position open from this entry. So we took profits here and I believe here, and I still have a little bit of position open in the inversity of dust. Okay, and next I wanted to highlight a trade that we did on a security called AVGO Technologies, AVGO. So first, before we get into the actual nitty-gritty of the trade, I wanted to know which which sector it belongs to. So it is a sector technology, and technology is definitely bullish. Also, and it's within the semiconductors industry group. So before I went any further, I wanted to see, is semiconductors energy group a strong group? So I pulled up a chart of XSD. This is Semiconductors ETF. This is one of the broader semiconductor ETFs as opposed to SMH, where Intel and I think Taiwan Semiconductors dominate. XSD is more broad, and I think it's a lot more diversified, and I think it's a better representation of a semiconductor industry. So in other words, here what I was looking for is a high SCTR score. In other words, is this industry group one of the leading industry groups? And indeed, this is one of the leading industry groups. In fact, SCTR has been above 90 for the past almost from the beginning of the year. So when we go back to chart of AVGO, AVGO Technology, you can see that the SCTR for a AVGO is also above 90. In other words, this stock is amongst the top stocks within the large cap universe. So this is a strong stock within a strong sector, within a strong industry group. And this is all working in your favor when you're looking for a buying opportunities. Okay, so now we have established that this is a strong uptrending stock. Now we're looking for an entry opportunity. And to me, a safe entry opportunity is when a uptrending security becomes oversold for some reason. So you can see here we hit an, this I believe is an all-time high in March of this year, and then corrected into May, into late April actually. You can see that the MACD also turned negative here, but also the SCTR remained very strong above the 90 mark. So in other words, even though there was a correction within a bigger uptrend, the momentum of the stock really did not suffer that much. Then on May 1st, we got our signal right here with a surge, and then we go ahead and enter the market and entered AVGO here. Now the way, first we need to know where, let's say this trade would have failed, and you can see that it came up and then actually retested the low. Sometimes it happens, sometimes it doesn't. It's just really, really difficult to say. But let's say it retested and it didn't hold, and it would have been a close below this support. So this would have been our stop as a close below this low. Then we were looking for how do we set the targets. And the target, the way I usually do it, I look for a, so this is an indicator called ATR, average true range. And this is just an indicator shows how much a stock, this particular stock, moves within the day. So this particular stock at entry moved $3.87 on average within the day. So my first target was 2 times this number plus the actual price. So the price was the first target was 130 right here, and it was reached within within a few days. Then the second target was for 4 times ATR, $137 right here, also reached on this day on the 27th of May. But you can see earnings report was on May 28th, and I try to never hold the stock into earnings because it is really difficult to say what if the market does not like the earnings. We could see a gap down, and then all of your profits would have been wiped out basically. So I tried to exit right before the earnings report and take my profits. Also, I wanted to point out that this stock indeed has earnings. It has price to earnings ratio which is more than 0. Many of the stocks, for example, within biotech universe, have no earnings. In fact, they are losing money, and that adds to risk. The reason for that is because, for example, biotechs, they have various studies going for I don't know, clinical trials going, and those studies are sometimes published on specific websites. So if you're not following them very closely, you could get a nasty surprise when a study comes out and it's for example, a negative study. So it just adds a negative, it just adds more to the risk basically. So I try to look for stocks which have earnings, which are within a strong sector, which are within strong industry group, and that are showing signs of strength themselves. Then for some reason they became oversold, and then we were looking for a good entry opportunity with a clearly defined stop, and at the very least 1 or 2 target prices for an exit, and also an exit strategy before the earnings report. All right, So that's all I wanted to say about this stock. Next, I wanted to show how to find us on the internet. Please go to MasterChartsTrading.com. We do have a blog there, and we have an upcoming trade alert services, which are hopefully going to start soon. We do have a public chart page as well, and all of the stocks that are mentioned in this chart are located right here on public chart page, so click on that link. Register for our, subscribe to our mailing list, and you'll be the first ones to receive in a promotional my God, I'm looking at a promotional pricing for our upcoming trade alert services. Also, if you have Twitter, Facebook, YouTube, or StockViews account, please do follow us there as well. Thanks for watching, and have another great trading week. Bye-bye.